Hey everyone, welcome back to the deep dive. Today we're diving deep into something I know a lot of you are interested in, sound money.
Yeah, sound money's a big one.
It is a big one, and to help us wrap our heads around it, we're cracking open The Bitcoin Standard by Saifedean and Ammous.
A classic.
Yeah, we're working with the audiobook version read by James Fowey.
Oh, Fowey's great. He does a great job.
Definitely. So in this deep dive, we're going to explore what sound money actually is. Like how do we define it?
Right.
And then we'll look at it through a historical lens, like how has it played out over time? And of course, because this is the deep dive, we're going to get into some of the bigger implications, like what does sound money mean for individual freedom and a society's ability to prosper?
All the good stuff.
All the good stuff. And I think one of the most fascinating parts of the Bitcoin Standard is how Ammous uses this really unique example of the Yap Island stone money system.
Oh, yeah, that's a great story.
It is a great story. And it's so interesting how he uses it to draw some really intriguing parallels to Bitcoin.
I think one of the things that makes the Bitcoin Standard so engaging is how Ammous starts with something we can all relate to. You know, those basic challenges of exchanging goods and services. Oh, he actually takes us back to a time before money as we know it, back to barter systems. How did people trade before we had these nicely printed bills and coins?
Right. So before we had money, how did we trade?
Exactly.
Okay, so let's try to picture this. Imagine I'm a skilled shoemaker.
Okay.
And let's say I want to build a new house.
A shoemaker with big dreams.
Always. So in a barter system, how would I even go about trading my shoes for a house? Like, how does that even work?
You've hit on the inherent inefficiency of barter right there.
Okay.
First, you run into the problem of coincidence of wants.
Yeah.
Does the person building the house even need shoes?
Probably not enough shoes to build an entire house.
Right. They might need a lot of other things, but probably not that many shoes.
That's a good point.
And then there's the question of divisibility. Like, how do you divide a house into shoe-sized portions for trading?
You can't trade a door for a shoe.
It just doesn't really work, does it? And then finally, you've got the storage problem.
Right.
Like, how are you going to store a house or even a large quantity of shoes as a form of savings?
Yeah, that's a great point. It seems incredibly difficult.
Yeah.
I mean, I can totally see why those issues would lead people to search for a more efficient solution.
Yeah.
Like a common medium of exchange, what we call money.
Exactly. And that's one of the key points that Ammous really highlights. Money emerges from the market. It's not something that governments just invented and imposed on people.
Okay.
He says that money is simply the most saleable good in a society. The thing that's easiest to trade for other things.
Saleability. That's kind of a new way to think about it.
It is. And you might be thinking, what does saleable even mean in this context? Well, it boils down to a few key characteristics. First, good money should hold its value over time.
So it's stable?
Right. You don't want something that's going to lose its value quickly. Then it should be easily transportable and widely accepted across different places.
Yeah.
It's something you can easily take with you and use in different markets.
Portable and universal in a way.
Exactly. And lastly, good money needs to be both divisible for small transactions and groupable for large ones. You need to be able to buy both a loaf of bread and a piece of land with it.
It needs to be flexible enough to work in a variety of situations.
Precisely. And those qualities are really what make something a good candidate for money.
So how does this idea of saleability, how does it connect back to me, and why should I care about sound money?
It has a direct impact on your purchasing power and your ability to save. You see, with a sound, stable form of money, you can have confidence that the value you hold today will be worth something tomorrow. Unsound money, on the other hand, constantly loses its value, making it harder to save and plan for the future.
That makes a lot of sense. And I think this is where the example of the Yap Island stone money gets really interesting. The book talks about these huge stone discs called rye stones that the islanders used as money for centuries. I mean, it's hard to even imagine using something so massive and immovable as currency.
I know it sounds crazy, right?
Ah.
But it's a fascinating example because it highlights how money doesn't have to be issued or controlled by a government to function.
Yeah.
These rye stones were really difficult to produce, and there was a limited supply of them. That naturally ensured they held value. It's actually very similar to precious metals in that way.
So scarcity drives value.
Exactly. What's more, it was a decentralized system, much like Bitcoin, without any central authority calling the shots. The islanders figured out a way to manage this monetary system on their own.
Wow. It really challenges our assumptions about what money can be. But of course, when most people think of money, they think about gold and silver.
Right. Those are the classics.
And they've been used as money for thousands of years, and for good reason.
Absolutely. They're durable, scarce, and divisible, making them ideal for trade. You can melt them down, divide them up, and they don't corrode easily. They've stood the test of time.
So they possess many of those characteristics of sound money.
Exactly. And, the gold standard, which tied the value of currencies to gold, facilitated global trade and capital accumulation for a really long time. It contributed to a period of significant economic growth and prosperity.
Which makes you wonder, why did we move away from a system that seemed to work pretty well?
That's a great question, and it's one that Ammous tackles head-on in the Bitcoin standard. He argues that it was a gradual process where governments steadily took control of money, moving away from gold and silver towards what we call fiat currency.
Fiat currency being money that's not backed by a physical commodity like gold.
Exactly. And that's where the danger lies, according to Ammous. Fiat currencies are inherently prone to manipulation. Governments can basically print more money whenever they want.
Because there's nothing backing it to restrict them.
Right. And all that printing leads to inflation, debasement, and the erosion of purchasing power. History is full of examples of this happening, and it's often had devastating consequences for people.
Yeah, the hyperinflation in Weimar Germany is a stark example of what can happen when a government has too much control over its currency. People saw their life savings wiped out practically overnight.
It was a tragic situation.
Yeah.
And in many ways, we're seeing a similar, albeit slower, devaluation of fiat currencies happening all over the world today. Just think about how much your money buys you now compared to a decade ago. That's inflation slowly eating away at your purchasing power.
So we've gone from bartering to precious metals, and now we're in this world of fiat currency. It's quite the journey when you think about the evolution of money.
It is.
But what really struck me in the Bitcoin standard was how Ammous connected the dots between sound money and the information system of capitalism. Like, he talks about prices being a language,
Oh, yeah.
constantly communicating information about supply and demand. It's a really powerful analogy.
It is. Just like a language allows us to communicate complex ideas, prices in a free market do the same thing.
Right.
They allow millions of individuals to coordinate their economic activity.
It's like this invisible hand guiding everything.
Exactly. These signals, these prices, they tell producers what to make, consumers what to buy, and investors where to put their capital.
But as Ammous points out, when you introduce unsound money into the mix, that language that we were talking about, the language of prices,
Yeah.
it starts to break down.
It's like trying to have a conversation where the words constantly change their meaning. You can't really understand what anyone's saying.
Exactly.
Imagine trying to run a business when the value of your currency fluctuates unpredictably.
Oh gosh, it'd be impossible.
It'd be a nightmare. It becomes almost impossible to make sound economic decisions.
Yeah.
And the whole system becomes less efficient. This is where we start to see those misallocated resources, those malinvestments, and those painful booms and busts that characterize the business cycle.
So we end up on this roller coaster ride of economic instability, and it becomes way harder to plan for the future. Which makes me wonder, if sound money is so crucial for a free and prosperous society, why have we strayed so far from it? Like, why have we allowed governments to have so much control over the very essence of our economic interactions?
That's the million-dollar question, isn't it? And the Bitcoin standard really digs into that. Ammous kind of traces this rise of government money back through history.
Okay.
He points to those early examples of monarchs debasing their currencies to finance wars or their lavish lifestyles.
Ah, so this has been going on for centuries.
Oh, yeah. It's a pattern that repeats itself time and again throughout history.
It's like this irresistible urge for governments to just print their way out of problems, even if it ultimately harms their citizens by eroding their purchasing power. And Bitcoin standard takes a step further. It argues that unsound money, it doesn't just damage our economies, it also erodes individual freedom.
Absolutely. Think about it this way. Sound money acts as a restraint on government power because it limits the ability of governments to engage in reckless spending or just inflate the currency at will.
They can't just print their way out of everything.
Exactly. It forces them to be more fiscally responsible and accountable to their citizens.
It's a really powerful idea. Imagine a world where governments had to actually balance their budgets. Like, they couldn't just print more money whenever they ran out of funds.
I know it's a radical thought, isn't it?
It is. But achieving that world, it requires a fundamental shift in how we understand money and its role in society.
I agree. And this is where the Bitcoin standard puts forward Bitcoin as a potential solution. Ammous argues that Bitcoin, with its fixed supply, decentralized nature, and resistance to censorship, it kind of embodies the principles of sound money in the digital age.
So Bitcoin is not just a technological innovation. It's a potential tool for reclaiming individual sovereignty and limiting government overreach. Like it offers this glimpse into a future where individuals have more control over their own finances.
Exactly. A future where economic decisions are driven by the market, not political agendas. And that brings us to another fascinating comparison that Ammous makes in the book. He contrasts the incredible technological advancements of the 19th century, which took place under a relatively sound monetary system, with the relative stagnation we've seen in the 20th century.
Which was dominated by government-controlled money.
Right.
It's an interesting point. Could our current monetary system actually be hindering innovation and progress by encouraging short-termism and distorting market signals?
It's a really thought-provoking question. And the Bitcoin Standard argues that sound money fosters a culture of long-term thinking, patience, and investment.
Okay.
It encourages individuals to save, to accumulate capital, and to support those really groundbreaking innovations that require a lot of time and resources to develop.
It makes you think about the major innovations of the 19th century, like the railroad, the telegraph, the telephone.
Yeah.
They all emerged during a period of relative monetary stability.
Right.
And then you contrast that with the 20th century. I mean, yes, we've seen incredible advancements in computing and information technology, but arguably fewer truly transformative innovations in other areas.
That's a good point. It's as if we've become more focused on manipulating existing technologies than creating truly groundbreaking new ones.
Hmm.
And you have to wonder, could this be a symptom of a society that's kind of hooked on instant gratification and short-term results, a society driven by unsound money? The Bitcoin Standard certainly challenges us to consider that possibility.
It does, but it's not just about material progress, is it? The book also delves into the deeper societal implications of sound money.
It does.
It explores how sound money fosters a culture of morality, responsibility, and long-term planning. Those are things that are often overlooked in these discussions.
I agree. It's about more than just the numbers. When individuals have a stake in the future, when they can trust that their savings will hold value over time, they're more likely to act in ways that benefit both themselves and society as a whole. Ammous argues that sound money encourages individuals to think beyond their immediate needs and consider the impact of their actions on future generations.
It's like this virtuous cycle where economic freedom and personal responsibility reinforce each other, leading to a more prosperous and harmonious society. And then the Bitcoin Standard takes us in an even more unexpected direction. It explores the relationship between sound money and artistic expression.
Oh, yeah, that's a fascinating part of the book.
It might seem like a strange connection at first, but he makes this compelling case for how the type of money we use influences the art we create and appreciate. Think about the great masterpieces of the Renaissance, the Baroque period, or even the 19th century. These works were often commissioned by patrons with a low time preference. They were individuals who were willing to invest their wealth in projects that would take years, even decades, to complete.
People who thought about the long term.
Exactly. They understood the value of enduring beauty, of creating something that would transcend time and leave a lasting legacy.
A timeless masterpiece.
Yes. And this long-term perspective, this low time preference, was often reflected in the art they supported.
You can really see it in the craftsmanship and detail.
Absolutely. But then we transition to a world of unsound money, dominated by government control and short-term thinking. And with that, we witnessed a shift in artistic expression as well.
Definitely.
The Bitcoin Standard suggests that modern art, with its emphasis on shock value, instant gratification, and superficial aesthetics, it kind of reflects the values of a society that's become increasingly detached from sound money principles.
I think we've lost something along the way.
It's as if we've lost our appreciation for craftsmanship, for patience, for creating something that will stand the test of time. Like we've become consumed by the fleeting trends of the moment, mirroring the constant devaluation of our money.
It's a sobering observation for sure.
It is.
And the Bitcoin Standard challenges us to rediscover that connection between sound money, beauty, and the pursuit of excellence. It encourages us to demand a monetary system that fosters creativity, long-term thinking, and a deeper appreciation for the things that truly matter.
It's fascinating how the Bitcoin Standard weaves together all these seemingly different ideas: sound money, art, individual freedom, societal values. It really gets you thinking about the profound impact money has on almost every aspect of our lives.
It really does. And that's a point that Ammous emphasizes throughout the book. He argues that sound money, it's not just an economic issue, it's really about the foundation of a free and prosperous society. And this becomes especially clear when he compares the limited government of the 19th century, which operated under a relatively sound monetary system, with the massive expansion of government power we saw in the 20th century under a fiat currency system.
It makes you wonder if there's a connection there. Could the ability to just print money at will have contributed to that expansion of government power?
That's exactly what the Bitcoin standard suggests. Think about it. Without that easy option of printing money, governments in the past had to be much more careful with their spending. They couldn't just fund endless wars, expand welfare programs indefinitely, or bail out failing industries whenever they felt like it.
So sound money acted as a natural check on government power.
Exactly. It forced governments to be more respectful of the limits of their authority. They couldn't just inflate their way out of problems or impose their will on citizens through excessive taxation. And this fiscal responsibility, it fostered a culture of self-reliance and individual responsibility. People understood that their economic well-being depended on their own efforts, their savings, and their wise investments. They weren't constantly looking to the government for handouts or bailouts.
That's a pretty stark contrast to the world we live in today, where government seems to be involved in almost every aspect of our lives, from healthcare and education to even what we eat.
It is. And this brings us back to those profound implications of sound money for individual freedom. When money is stable and predictable, it empowers individuals to make long-term plans, to save for the future, to build a better life for themselves and their families, and to break free from that cycle of debt and dependency. In a way, sound money allows individuals to become the masters of their own destinies, to chart their own course, and contribute to society in meaningful ways.
So it's not just about accumulating wealth. It's about creating a world where individuals have the freedom to pursue their dreams, to innovate, to create, and to leave a lasting legacy behind them. And the Bitcoin Standard argues that Bitcoin could be a key part of turning that vision into a reality.
It could be. Ammous sees Bitcoin as a potential path back to sound money principles in this digital age we live in. Its fixed supply, its decentralized nature, and its resistance to censorship, all these features make it a really intriguing alternative to government-controlled money.
It's a really powerful idea, but even if we agree that sound money is crucial for individual freedom in a flourishing society, the question remains, what can we actually do about it? How do we transition away from a system that feels so deeply entrenched?
That's where things get tricky. There's no easy answer. But the Bitcoin Standard at least gives us a framework for understanding the problem and exploring potential solutions. Ammous encourages people to educate themselves about money, to have these thoughtful conversations about its role in our lives, and to support alternatives like Bitcoin that align with the values of a free society.
So this deep dive, it's been about much more than just understanding the history of money or the technical details of Bitcoin. It's been a journey into exploring this fundamental relationship between money, individual freedom, and the kind of society we want to build for ourselves and for future generations.
You said it perfectly. And as we wrap up our exploration of the Bitcoin Standard, I'd like to leave our listeners with a final, thought-provoking question from the book. Given the historical track record of government-controlled money, what might be the long-term consequences of continuing down this path? Are there alternative monetary systems, perhaps like Bitcoin, that offer a path back to sound money and greater economic freedom, a path towards a more prosperous future? These are questions worth pondering, and the Bitcoin Standard gives us the tools to start seeking those answers.
Thank you for joining us on this deep dive into the Bitcoin Standard. We hope this exploration has sparked your curiosity and given you a fresh perspective on the power and importance of sound money. Hey everyone, and welcome back for another deep dive.
Excited to be back.
Today we're diving into something pretty complex and fascinating.
Yeah, it is.
Monetary theory,
Um,
with a focus on the Austrian school perspective.
right.
So we're going to be looking at this book
Okay.
that really challenges some of the conventional thinking about money and banking.
Yeah, and I think one of the most interesting things
Yeah.
about this book is it really
Yeah.
doesn't pull any punches.
No, it doesn't.
Like right out of the gate.
It's bold.
The author's basically saying that the idea
Yeah.
that governments should be in charge of managing the money supply
Oh.
is like the biggest scam
Wow.
of modern times.
Strong words.
He really doesn't hold back.
So no mincing words.
No.
But what's the basis for this? I mean, why is he saying that?
Well, he argues that there's actually no real-world evidence
Okay.
to support the idea that governments can manage money successfully.
Okay.
In fact, every time they try,
Uh,
just makes things worse. It leads to all sorts of economic problems.
okay, so if he's not a fan of government intervention,
Right.
then what's the alternative?
Well, he's a big proponent of the Austrian School of Economics,
Okay.
which has a very different view.
Right.
They believe that money should emerge naturally from the market.
So instead of like top-down control, it's
Yeah.
more like bottom-up.
Yeah, it's like,
The market decides.
exactly. The market decides what's the best form of money.
And that's a pretty radical idea when you think about it.
It is.
I mean, we're so used to this idea of central banks and governments being in charge
Right.
of money.
one of the key things that the Austrian school emphasizes is saving.
Oh, okay.
Saving is crucial to long-term prosperity.
Interesting, because you always hear that spending is what drives an economy.
Right. That's the common narrative.
Yeah, got to keep the money flowing.
Yeah, I got to buy things.
The author argues that a society that prioritizes saving over spending will actually end up consuming more in the long run. Okay, so more saving leads to more consuming eventually. That seems a little counterintuitive.
It does, but it all comes down to capital accumulation.
Okay.
When people save more,
Yeah.
there's more money available for investment.
Okay.
And those investments lead to greater innovation,
Uh-huh.
greater efficiency,
Makes sense.
and ultimately more wealth for everyone.
So it's kind of like a delayed gratification kind of thing.
Exactly. It's like planting seeds for
Yeah.
a future harvest.
You gotta wait a little bit
You got to wait.
for that big payoff.
Exactly.
Yeah.
So you know it's all about
Long-term thinking
long-term thinking. Exactly.
versus that instant gratification.
Right. Is that we're
So,
bombarded with constantly.
yeah, exactly. And actually, the book makes this comparison
Oh, yeah.
to the marshmallow experiment.
Oh, that's a good one.
Yeah.
But kind of a twisted version of it?
Yeah, explain that.
So you know the classic marshmallow experiment?
Where the kid can get one marshmallow now
Right.
or wait and get two later.
Exactly.
Yeah, and most kids can't wait.
Well,
They want that instant marshmallow.
exactly.
But in this case, he's saying it's like the system is set up
Yes.
to punish you for waiting for the second marshmallow.
It's like,
You get penalized.
yeah, you get penalized for being responsible.
Yeah, and I feel like we see that in so many ways.
Absolutely.
Like, saving is discouraged,
Yeah.
spending is encouraged.
Yeah, borrowing is encouraged.
Yeah, so it's like constantly pushing you towards that.
That first marshmallow.
Yeah, first marshmallow.
Yeah.
Yeah, and so this author is saying that a sound money system
Right.
would actually encourage people to save more.
Exactly. Because if you know that your money is going to hold its value over time,
Yeah, you're not going to be so quick to just spend it.
you're more likely to think about the future.
Yeah, makes sense.
Okay.
Now, we were talking earlier about different schools of thought
Yeah.
in economics.
Right.
How does the Austrian view compare to,
Okay.
let's say, the Keynesian approach?
All right. So the author is actually pretty critical
Okay.
of Keynesian economics.
All right, and for our listeners, just really quick.
Yeah.
Keynesian economics is kind of the dominant view
Yeah, that's the mainstream.
in a lot of circles today.
Right.
So what does he disagree with?
Well, he disagrees with the idea that government intervention
Okay.
is the way to stimulate the economy.
So like government spending.
Government spending, manipulating interest rates,
Yeah, all that stuff.
all that stuff, he says, actually leads to a lot of the problems that it's supposed to solve.
So it's kind of like a Band-Aid solution.
Yeah, it's a short-term fix.
That ultimately
It's like that friend.
creates more problems.
Yeah, it's like that friend who's always telling you to splurge.
Yeah, you deserve it. Live for the moment.
Exactly.
Hmm.
But they never talk about
Yeah, what about saving?
saving for the future.
Yeah.
Right.
So does that approach really lead to long-term prosperity?
That's the question. And the author argues that it doesn't. It actually creates a culture of what he calls high time preference.
My time preference.
Meaning people value the present far more than the future.
Okay, and so we end up with this cycle of overspending and debt and all the things that we see.
Right, exactly.
Yeah.
It's like we're constantly being tempted to grab that first marshmallow,
Even though
even though we know it's not good for us in the long run.
we'd be better off waiting for the two.
Exactly.
Yeah.
And he uses this really striking analogy to describe government money management.
Okay, what's that?
He compares it to a drug addiction.
Whoa.
Yeah.
Okay, explain that one.
So he's saying that government stimulus is like a quick fix.
Okay.
Like a shot of adrenaline for the economy.
Okay.
It might feel good in the short term,
Yeah.
but ultimately it leads to a lot of long-term damage.
And we've seen that, haven't we? I mean, like the 2008 financial crisis.
Exactly. And he actually points to the stagflation of the 1970s
Okay.
as a real-world example of how these Keynesian policies can backfire.
And just as a reminder for our listeners,
Yeah.
stagflation is when you have high inflation and high unemployment
At the same time.
at the same time, which was supposed to be impossible.
Right, according to Keynesian theory.
Yeah, and yet it happened.
It happened.
Yeah.
And it really shook the foundations of
Yep.
Keynesian economics.
Yeah, and this author is saying
Yeah.
that was a direct result
A direct consequence
of those policies.
of those policies.
Wow.
Yeah.
So he's basically saying we need to rethink our whole approach to money and economics
Absolutely.
if we want to create a more stable and prosperous future.
Yes.
Yeah, but the question is that even possible? Can we really just ditch the current system and start over?
Well, that's where things get really interesting.
Okay.
Because the author believes that Bitcoin,
Okay.
this digital currency that operates independently of governments,
Right.
could be the key to escaping this whole mess.
Okay. Bitcoin. All right. So now we're getting into some uncharted territory.
We are.
But I have to admit, I'm intrigued.
Yeah.
Tell me more about how Bitcoin fits into all of this.
Okay, so first of all, Bitcoin has a fixed supply.
Okay.
There will only ever be 21 million Bitcoins in existence.
So no government can just print more whenever they want.
Exactly. That's the key difference
Okay.
between Bitcoin and any fiat currency we've ever seen before.
So it's like digital gold in a way.
Yeah, you could say that,
Okay.
but even more scarce
Okay.
and arguably more secure.
All right. So Bitcoin is scarce,
Yes.
but how does it actually work?
That's where the technical details get a little bit complex.
Yeah.
But essentially, Bitcoin uses cryptography
Yeah.
and a decentralized network to ensure that every transaction is secure and transparent and tamper-proof.
So there's no central authority controlling it.
Right. It's all managed by the network itself.
Okay. So that's pretty revolutionary when you think about it.
It is.
I mean, we're so used to having
The central authority.
central authority.
Yeah.
Yeah, like a bank or a government.
Right.
So to have something that's completely decentralized is a pretty radical idea.
It is.
Yeah.
And that's one of the things that makes Bitcoin so appealing.
Okay. I think we're going to have to dive deeper into this whole Bitcoin thing.
We'll definitely have to explore that more.
This is getting really interesting.
It is.
So stick with us as we continue this deep dive into Austrian economics
And Bitcoin.
and Bitcoin and the potential that it has to reshape our economic future.
It's a fascinating topic for sure.
It is. So before the break, we were really getting into some of the issues this author sees with how money is managed today.
Right. Like, it's not just about theoretical concepts.
Right.
This unsound money, as he calls it.
Yeah, he doesn't like that term.
No, he does not.
Unsound money.
Yeah, it really distorts the natural incentives
Yeah.
of a free market.
It's like it throws everything off balance.
Exactly. It's like, imagine you're a farmer
Okay.
and you know the government's going to come along every year and just give you free seeds. What incentive do you have to save your own seeds?
Yeah, you would just
You just rely on the handout.
take the free ones. Yeah.
Exactly. And so he's saying that that's what unsound money does to the whole economy.
Wow.
It creates this culture of short-term thinking.
Yeah, instant gratification.
Exactly.
Yeah.
You know, just spend, spend, spend.
Don't worry about tomorrow.
Yeah. Why save when you can just get more?
Yeah. And so this leads to all sorts of problems.
All sorts of problems.
Not just for individuals, but for the whole economy as well.
for the whole system.
Yeah.
Yeah.
Yeah. And we talked about that high time preference earlier. It's like unsound money forces people into that mindset.
It's like you said, that twisted marshmallow experiment.
Yeah. You're always going to grab that first marshmallow.
Because you don't know if there'll be a second one.
Exactly.
Right.
So we end up with a society that's overspending, accumulating debt, consuming more than it saves.
Yeah, and all of that leads to
What did he call it?
malinvestment.
Malinvestment. Yeah, that's a good one.
It's a fancy word.
It is.
But it basically means that capital is not being allocated efficiently.
Okay, so it's being invested in things that wouldn't make sense.
Right. They wouldn't be profitable.
In a normal market.
In a truly free market.
Yeah.
But because of this unsound money
Mm-hmm.
and government intervention,
Yeah.
you get these,
These zombie companies.
yeah, the zombie companies.
The ones that just can't quite die.
Right. They keep getting bailed out.
Yeah, kept alive by artificial means.
Exactly. And the author argues that these zombie companies are actually a drain on the real economy.
Yeah, like they suck up all the resources.
They suck up the resources and the capital
That could be going to,
actual productive businesses.
yeah, to the innovators, to the people who are really creating
Yeah.
value.
The ones that are actually creating something.
Yeah. He has this great analogy. He compares these zombie companies to parasites.
Oh, yeah, that's a good one.
Yeah, feeding on the body economic.
Yeah, it's a pretty striking image.
It is, and it's kind of disturbing when you think about it.
It is. It is.
So we've got this system where unproductive businesses are thriving,
Yeah.
while the innovators, the people who are actually trying to build something new,
Right.
are struggling.
It's like the whole system is backwards.
Yeah. And he calls this the bezel economy,
Yes.
right? And he uses the analogy of a bezel on a watch.
Yeah, you know that ring around the watch face?
That's decorative.
Yeah, it's all about appearances.
It doesn't actually do anything.
It doesn't contribute to the function of the watch.
Right. So the bezel economy is all about,
Smoke and mirrors.
yeah, looking good on the surface, but underneath,
Hollow.
it's empty.
It's unproductive.
And unsound money is the fuel that keeps this whole thing running.
Exactly. It's the easy credit.
Yeah.
It's the bailouts.
It's the artificial stimulus.
All of that keeps these unproductive businesses afloat.
Yeah. It's a pretty bleak picture.
It can seem that way.
Yeah. Like, what are we supposed to do?
Well, the author isn't just trying to paint a depressing picture. He wants us to understand how the system works so we can start to think about alternatives.
Okay, solutions. Yeah. Okay, so we talked about Bitcoin earlier
Right.
as a potential antidote to this unsound money.
Right.
But before we get into that,
Yeah.
I want to understand how this unsound money
Yeah.
impacts people like you and me,
Right.
our listeners.
In our daily lives.
Yeah, like how does this actually affect us?
Yeah. So the author talks about how unsound money has this corrosive effect
Okay.
on our lives in many ways.
Give me some examples.
Okay. So for one thing, it makes it really hard to plan for the future.
Yeah, because if the value of your money is constantly eroding,
Exactly.
like how can you save?
Yeah. How do you save for retirement?
Yeah.
How do you save for down payment on a house?
Your kids' education?
Yeah. It's like you're running on a treadmill.
Yeah, you're working hard, but you're not getting anywhere.
You're not getting ahead.
Yeah.
And then there's the issue of economic inequality.
Oh, yeah, that's a big one.
Yeah, remember we talked about the Cantillon effect?
How new money enters the economy and benefits those who are closest to the source.
Right. The banks, the big corporations, the politically connected,
Yeah, they get the new money first.
they get it first and then it trickles down.
And by the time it gets to the rest of us,
It's worth less.
it's been devalued.
Exactly.
So it's like a hidden tax on the poor and the middle class.
Exactly. It disproportionately affects those who can least afford it.
Yeah, so unsound money actually makes the gap between the rich and the poor even wider.
That's the argument.
Yeah.
And the author says this has huge social and political consequences.
Yeah, of course it breeds resentment.
Yeah, it undermines trust.
It can lead to instability.
All of that.
So it's not just an economic issue, it's a societal issue.
It's a systemic issue.
Yeah, it's pretty scary when you think about it.
It can be,
Yeah.
but remember, the author is trying to show us how to fix it.
Okay, so what's the solution?
Well, he believes that Bitcoin offers a way to escape this broken system.
Okay, so Bitcoin's more than just a speculative investment.
It's a potential solution.
It's a way out.
It's a way out.
Yeah.
But to understand how, we need to take a closer look at what makes Bitcoin so different from traditional money.
Okay, so let's do that.
Let's get into the nitty-gritty.
Let's dive deep into the world of Bitcoin. Okay, so we've talked about the problems with unsound money and this whole bezel economy idea.
Right.
Let's dive into this potential solution.
Okay.
Bitcoin.
Bitcoin. Yeah.
It's a digital currency.
Mm-hmm.
But what makes it so different from just using like,
Great.
Apple Pay or Venmo or something?
Those are just built on top of the existing financial system.
So they're still using dollars.
Exactly. They're still using dollars, euros, yen,
Yeah.
all controlled by central banks.
Yeah.
Bitcoin is completely separate.
So it's like its own little...
It's its own system,
Yeah.
its own monetary system.
I don't think, how does that work?
It's kind of hard to wrap your head around.
Yeah.
But imagine a digital ledger, a record of every Bitcoin transaction ever made.
Okay.
And it's not stored in one place. It's distributed across a vast network of computers all over the world.
So it's decentralized.
It's completely decentralized.
Okay.
And this ledger, this blockchain,
Blockchain.
is constantly being updated and verified by these computers
Okay.
using really complex cryptography.
Okay. To make sure that it's secure.
Secure, transparent,
Yeah.
tamper-proof.
So nobody can mess with it.
Exactly. It's like a giant public spreadsheet that everyone can see,
Okay.
but no one can tamper with.
Okay, so that makes sense.
Yeah.
But what's stopping somebody from just like creating a bunch of fake Bitcoins?
Right. That's a good question.
And just like,
Yeah. How do you prevent counterfeiting?
yeah, throwing the whole system off.
Right. So that's where the genius of Bitcoin comes in.
Okay.
New Bitcoins are created through this process called mining.
Mine.
And it involves solving incredibly complex mathematical problems.
Okay.
It requires a ton of computing power and energy.
So it's not easy.
It's not easy at all. And it actually gets harder over time.
Oh, wow.
So there's this built-in scarcity,
Okay.
which is one of the things that makes Bitcoin so unique.
So unlike the dollar where the government can just print more,
Exactly.
Bitcoin is limited.
Bitcoin has a fixed supply, 21 million.
21 million.
That's it.
That's all there ever will be.
That's all there ever will be.
Wow.
And that scarcity is what gives it value.
Okay, so it's like digital gold.
Yeah, that's a good analogy.
Okay.
But I've heard people say that
Yeah.
Bitcoin is really volatile.
It is. It goes up and down like crazy.
It does.
So how can it be reliable if it's so unpredictable?
Volatility is definitely a concern, especially in the short term.
Oh, okay.
But the author argues that as Bitcoin matures, as it gains wider adoption,
Uh-huh.
its price will stabilize.
That's like any new technology.
Exactly. Go through these growing pains.
It's the Wild West right now.
Yeah, exactly. The Wild West of finance.
Yeah.
But eventually things will settle down.
Okay, so as more people start using it and understanding it.
Right. And as they understand its underlying value proposition,
Mm-hmm.
its scarcity, its security, its independence from government control,
Yeah.
the price fluctuations should become less dramatic.
Okay, that makes sense.
Yeah.
But even if it does become more stable,
Yeah.
what about the practical side of things?
Right. Can you actually use it?
Can I buy groceries with Bitcoin?
You can actually buy a lot of things with Bitcoin these days.
Really?
Yeah, you can buy everything from coffee to cars.
Wow.
There are also Bitcoin ATMs popping up everywhere.
Oh, wow. So it's becoming more mainstream.
It's definitely becoming more mainstream.
Okay, so that's cool. But I've also heard a lot of negative stuff about Bitcoin.
Oh, yeah.
Like, it's used for illegal activity.
Yeah, like buying drugs on the dark web.
Yeah, exactly. Does that concern you?
It's understandable that people have those concerns.
Yeah.
But any technology can be used for good or bad purposes.
That's true.
I mean, cash is still the preferred currency for most criminals.
Yeah, that's a good point.
Right. Nobody's talking about outlawing cash.
Right.
What's interesting about Bitcoin is that every transaction is recorded on this public blockchain.
So it's actually more transparent than cash.
It is. And as law enforcement agencies get more sophisticated
Yeah.
in understanding blockchain technology,
Mm-hmm.
it's going to become increasingly difficult to use Bitcoin for illicit purposes.
Okay, so that's reassuring.
Yeah.
But even if it is safe and secure,
Yeah.
isn't it all a bit too complicated for, like, the average person?
That's a fair point.
Hmm.
Like, all this talk about blockchains and cryptography can seem pretty overwhelming.
Yeah.
But the beauty of Bitcoin is that you don't need to understand all the technical details to use it.
Okay, that's good.
Just like you don't need to know how the internet works
Right?
to send an email or browse a website.
Mm-hmm.
You can use Bitcoin without being a cryptography expert.
Okay.
There are tons of user-friendly wallets and apps that make it really easy.
Okay, so it's becoming more accessible.
It is.
Okay, but even if I can figure out how to use it, why should I?
Yeah.
What's the real benefit of switching to Bitcoin?
That's the million-dollar question.
Yeah.
And ultimately, it comes down to individual choice.
Okay.
But the author makes a compelling case for why Bitcoin could be a valuable tool
Okay.
for anyone who wants to protect their wealth from inflation,
Okay.
take control of their own finances,
Yeah.
and participate in a more equitable and transparent financial system.
So it's about more than just making money.
It's about opting out of a system that a lot of people see as broken and unfair.
Yeah, taking your financial future into your own hands.
It's about taking a stand for individual sovereignty and financial freedom.
This has been such an eye-opening conversation.
It has.
We've gone from Austrian economics to the technical details of Bitcoin.
It's a lot to digest.
It is.
But I hope our listeners come away from this
Yeah.
with a better understanding of the challenges we face
Yeah.
with the current monetary system.
And that there are alternatives.
And that there are alternatives out there,
Like Bitcoin.
like Bitcoin.
Yeah.
And who knows what else is coming down the pike.
I know, I've definitely learned a lot.
Me too.
It's made me think differently about money.
That's what these deep dives are all about.
It's really challenged some of my assumptions.
They're meant to spark curiosity, encourage you to do your own research,
Yeah.
and empower you to make informed decisions about your own life and your own finances.
So to our listeners, we encourage you to keep exploring these ideas.
Keep learning. Keep asking questions.
Yeah, challenge your own assumptions about money.
Don't be afraid to think outside the box,
And think critically about the systems that shape our world.
because the future is being written right now.
And we all have a role to play in shaping that future.
That's right.
So thanks for joining us on this deep dive.
Always a pleasure.
And we'll be back soon with more fascinating explorations.
Stay curious, everyone.
Keep diving deep.